So the trade was already taken. I'm going to walk you through it. Let me show you the chart real quick. On this chart, I took gold at this zone right here when it came back and bounced on this level. And then I just watched for the volume to get in my increase in volume, and I took the entry here on this candle, and we got out somewhere in here because the way we traded it, we walked this trade up and we followed it that way. But I'm going to show you the trade live, and I'll talk to you through it as I go through it. But let me show you where my target was. So I had started out my target because I like to do a one-to-one measured move, and if we were talking about Ichimoku, it would be our price observation theory. So I first started out with my target here. All right, and so my one-to-one was going to be right here, this 100 level. But I moved it because I realized that this is where the move started. It didn't start here because we had the correction already. So we had a little wave right here, little N wave right here. Actually basically a little P wave right here. This is basically a P wave if you're talking Ichimoku, right? So this would be a P wave, and let me draw this out for you. This would be a P wave right here. All right, and then the market moved. This is where I started my move. So this, we're looking for the N wave. So we're looking for the market to complete this leg up into this area here. Now I got out in this area because a couple reasons. First of all, I had my profit went up to like 1500, and then I got out at about 12. Reason being is because I walked my trade up. So when I say that, I'm talking about as the market moves higher. So when this candle closed, I started with my stop loss slightly below this level here, and as each candle moves, I wanted to move my stop loss. Well, finally we get here, so I put my stop loss under this level, and then when we get to this candle here, I moved my stop loss under this level, and pretty much I moved it up to this point on this candle, and then I got taken out here. I could probably show you real quick, and then I'll show you the trade. I'll walk you through it live. You can see we're getting ready to hit that target where the market is aiming for that target, that one-to-one measured move. And again, Ichimoku, this be a your price observation theory. All right, and let me show you real quick, and then I'll show you the trade. So we're going here, and this shows you the trade pretty much. This shows you where I got in. All right, got in here after this candle closed, got in here after we saw this volume increase, and then we got out right here. Man, if we could have just held it. I would have got stopped out anyway because the market came back this far. I didn't want that. Now, what was tricky was you watch me on the trade as this candle comes back down. I really said this was going to be my limit right here. Now, you had good profit, and to lose that good profit, you wouldn't even got half of that profit if you get stopped out down here. All right, but the market pushed back up, and then we could see what happened. It got taken out here, looking for the market to finally make this level at about, what, 1959.4. Looks like it's heading to that level, and we can probably sit here and watch. It's probably going to hit that level. The market likes to move in these measured moves, one measured moves, and that's how you could find your target. So if I hadn't gotten taken out here, I definitely would have been able to keep my stop here and take my profit at this level. So let's move it. I'm gonna wait a minute because let's see if we hit our level. This would have been our trade target. That was our #1 target right there. And guys, we hit that target. That's how you trade. All right. Now we hit that target. I would have taken that target, but I like to see if the market's going to go through that level like that. And then I wait to see what the next candle is going to do. Now, if this pulls back too much, you just take your target. It's going to reject that level. All right. But you're able to hold on here and probably get more profit. And you can see what it's doing. It's going well through that level. So then the next level we will look at is 161. Now, it may not close at this level. Let's see where it closes. Got 52 seconds. So now I'm going to show you the trade. I know you guys want to see that. But trying to teach you guys. So in the process, I want to give up some education, some knowledge. and talk about things to help people. These big candles are dangerous. All right, very dangerous. All right, most people see these big candles and think it's a nice long opportunity, but a lot of times, like you'll see these big candles, I'm going to show you. This big candle, you would have thought this market was bearish, but in the process, all right, it's bulls starting to come in here, and this market moves to the upside. I never trade these big candles in the direction that you see. Here's another big volume bar, and you could see the next bar, the next candle, the market started to push to the downside. So you get this big one here. You may see the next one close. Now, if I was in this trade still, I'd have moved my stop loss up to this level now. And then now it takes off on you. You can move it up, move your stop loss right here, and just follow the market up as it goes. All right, so let's look at this trade. All right, guys, so we're looking at this trade as it moves live right here. Actually, not live now, but it was live here on this recording. So what I'm doing is marking this zone because we have the market pushing higher. So I marked this fractal zone. Hold on one second. So I'm marking this fractal zone right here. Marking that zone. The market pushes higher. We look for the correction back into that zone. Look for that correction back into that zone, and then we look to trade the market. And then I showed you guys how I found the one-to-one measured move. I actually started it there, but I really realized it should have been here because, like I said, we had a P wave formation here. And then we wanted to see the market move from that level where the market broke out of the P wave, where that where it started here. So I'll talk about this trade as it goes. But really, it's going to be, you could see what's happening here. So I'm looking now to see volume. I'm watching the volume now. I want to see the increase in volume. That'll tell me that some bulls are coming into the market. And that's inside my zone where I see the bulls coming into the market. This is basically a bounce off of this fractal level. And then the market moves. You look for these kinds of trades all day long because the market likes to pull back to these fractal levels. So I believe this candle is going to close with bullish volume, and I'm going to get into the market here. Yep, about to get into the market. So I kind of like to wait for the trade to close. I want to make sure I do have bulls taking over at that point. I wait for the candle to close. And you could see candle closing. 1 second, candle closed. Took the trade, moved my stop loss up to the bottom of the zone. Then I find my one-to-one measured move, and that's where I move my target to. My target's way up here, but I'm going to set it based off of the one-to-one measured move. So I started the measurement here. I realized I should have started it here because I saw the P wave formation, and then I moved it back to here. You'll see me do that later. All right. So right now, all we do is wait. Now, one thing I like to always do, and about my trades, hold on 1 second. About my trades, I don't like my trades to be, I don't want to take a trade close to this 2 level. And if I stop moving the screen, I'll be able to explain some stuff to you. So that 2 level to me is this. When you have the measured move, or when you have an N wave, so you're talking like Ichimoku targets, Ichimoku wave theory. So we would say this is an I wave, this is a V wave, and we look for the N wave. So this would be my 1 level, this would be my 2 level, and this would be my 3 level, and then your target will be your 4 level. And so we find the target with the measured move that I just showed you after we broke out of this P wave here. This is a P wave, all right? And then as we broke out of that P wave, That's where we started our measurement from, where the bottom of that measurement, where it broke out of that level, the start of that leg. So that's where we marked that. And then the thing about it, guys, is this is your 2 level. You don't want to take trades at near this level. You always want to be taking trades at a 3 level that's closer to the 1 level. But well, 1 level could be like a double bottom, or you're like 50% of this leg or whatever. But most of the time, my 3 level is going to be a target, not a target, but basically a zone or a support and resistance level that I've previously looked at, that I already know that the market may pull back to, which would be this fractal. If I was trading with Ichimoku, it could be like Kijun-sen or something like that. So it would pull back to like Kijun-sen, and then I would take the trade if I was trading with Ichimoku. In this case, I'm not, so it pulls back to the fractal, which is now my 3 level. And then, like I said, if I was trading Ichimoku, it would pull back to that Kijun-sen, which would be my 3 level at that point. But I took this trade. We're in the trade, not making anything that much right yet. And then we could see what happens here. Market pushes back down. Now I could see lower, like the volume declining. So I knew we didn't have the strength real at that point. We want to see increasing volume for the market to really move higher. You want to see increasing volume for the market to move lower. You want to see increase in bull volume or increase in bear volume. So this right here shows that we're getting weak. Bears are getting weaker because the volume is basically the force, the gas, and each bar is the force of that move. And the less force you have, the less momentum you have. Therefore, you start to die out down here. And you can see this gray bar here was an equal bar. It means we had equal bears and bulls pretty much. So when you see that, then you get another push here. And this is where the bulls came in. And then that's where we took our trade because we're inside our zone. Now the market's pushing good. I felt real good about this right here, this rejection. Had the rejection here with more volume. So I kind of felt good there. I'm marking this. I remarked this. As you could see, I remarked my level because I realized the P wave formation. So you can see I'm remarking that level. And basically, guys, everything that I talk about or show you guys or try to, like when I hold webinars or anything, whatever I talk about, this is what I trade. And I'm proving it to you right here with a real live trade that I'm showing you the things that we talk about, the P waves, the one-to-one measure moves, the price targets using Ichimoku observation theory. All that stuff holds true. So I wanted to get through this level right here. This was the main thing. Had to get through this two level. If we're not getting through the 2 level, we're not going to make profit. We're not going to be able to. Basically, the market could range at this point because if you can't get through this level, then a lot of times what happens, the market comes back down into this level and you start to range here. And then maybe you break out to the downside or the upside or whatever, but you'll get stuck in a range because you get up to this 2 level and then you don't break through. And then finally you break eventually sometime. But that's why I always want to get through that level with my trades. So a lot of times I'll set my target there, my first target, and I'll take half off the table. And then my next target would be where I set this one up here. All right. So all I'm doing now is just waiting, guys, because I should have actually moved my stop loss, but you'll see me move it up. So I should have actually moved it up to this point already because we don't want anything to happen where it comes back and we lose everything and we're still down here when we should have been right there at least. And you'll see me move it there shortly. So this was a gold trade. Like I said, you could see we're trading gold futures. and we're like about close to 1,000 right here on this profit. I wanted to get at least that 1,000. So this is my first trade, and right now it's only 10.10. So but when I took this trade, it was not even, I really took the trade at about, what time was it? 9:10. So about an hour ago. And then now we're just replaying the trade that we recorded at that point, just to help you guys understand here. Now this was really nervening right here to me, because I realized if we did go here, we were going to lose all this profit. All right. And after this candle, that's when I moved my stop loss. I see this all the time. So if you see this, study the market that you trade, you'll sometime know what you're seeing and what these moves are. And it didn't even come back to this point. But what I had marked was, guys, previously I marked when the market got up to this level here, I marked this right here, because when this candle started, there was a gap here. This was an imbalance, and the market came back to cover that imbalance. So that's why I wasn't real scared or real worried, because I felt the market was coming back to cover this imbalance that was there and fill that imbalance and then move higher. Now, if it closed below this candle here or went below that candle level, then I would have felt we were doing more than just covering that imbalance, because you had an imbalance when this candle opened up here. Because now you have an imbalance between this point and this point. And then the market just filled it just now. And then now it starts to move back on in its direction. All right, after it covers that imbalance. So it's pretty boring just sitting here watching the trade that I took. But hopefully I'm explaining some things to you guys that may help you with your trading. So I told you why I got into the trade. I told you where I got into the trade. I got into trade based off of the volume again. I got into trade based off of my level. So I had a level. And then I had increase in volume that I wanted to see. I wanted to see bull volume coming into the market at this level. And then we took the trade. Now there's some other aspects that I'm using that I don't show you right here. Using the VIX, ADD, using those to help me out in the NYSE tick. So as I explain these videos, I'll show you more of that stuff. But everyone worries about trading the market with or without indicators. A lot of people they want to trade without indicators. You want to trade the way that's going to make profit for you. Don't worry about what people say about indicators, using them or not using them. All right. Somebody could be trading with no indicators, but they're not making any money. And then the next guy could be trading with two indicators and he's making profit. Now, I don't believe in a bunch of indicators on my chart. That's for sure. So here's where my stop loss should have been moved up, because now we really want to wait for this candle to close. And there you go, moved it up. And then when this candle closes, we want to put our stop loss right there. That's what I just pointed out. That's what I'm trying to point out. When you saw that mouse moving, that was me trying to tell you guys what I wanted to do and see. And we're making a little bit of profit here. We got up to 14, I think, right there, 14. And we really didn't want to go below 1,000 at that point. So we gave the market a little room to pull back on us, but we definitely didn't want to go below 1,000. So we knew where we were to take that profit. So eventually, once this candle closes, we'll move that target up. And you can see I moved it up early. We still got 23 seconds left, but sometime when you do that, next thing you know, the market comes down, takes you right out. But that's okay. we would have been at a good level where we wanted our profit anyway. Because what we would have been doing then is if we didn't take our profit when it started to drop below this level, now we're just holding on and hoping that we get more profit, when in reality we should have taken what we had. So I think we're getting ready to be done here shortly. Market's not really going to go much higher before it takes me out at this level. And that's my trade. But I'll let you guys see the end here. But guys, if you like the video, please do give me a like, thumbs up, subscribe, hit that notifications button. Be notified when I post any more content like this, if you do like this kind of content. And also you'll be able to see some of the live webinars I do where I'm going to be trading live. So where I'll be trading live and you guys can just hear me and watch me trade. Might try to do some of those on YouTube. We'll see. Sometimes for me, it's hard enough just trading instead of and you're worrying about talking to people and worrying about your video and this and that, blah, blah, blah. I want to sometimes just be able to sit there and be able to concentrate, because sometimes this stuff is tough. Anybody tell you that it's not tough, then they're lying to you. If it was not hard, everybody would be doing it and everybody would be profitable. There wouldn't be 95% failure rate, whatever it is, somewhere in there, but it wouldn't be that. It's not even 50-50, like. So that lets you know how tough this is. Not even 50% of the people can do this, that try this, trade in the markets. But guys, again, I know where my profit is. I wanted to get at least 1,000 on this trade. So I didn't want to go below this level. And I thought I was going to get taken out there. I think this candle moves up and I move it up just a tiny bit below this level. And then that's going to be it for me. And you'll see me get stopped out shortly here. Now see, this was a nice push back up. I thought the market was going to be able to break. And you will realize that we're in this little, whoops, I keep moving the chart. We're basically in between this candle right here. This candle. Moving that chart. So we're this low and this high. Want to see the market close above or below to know where we're going next. So if we close above, we probably see the market continue this trend to the upside. We close below, we're probably correcting, may see it come back into this zone. All right. But you're going to see me get taken out here and the trade's going to be over. And we're sitting right there. This was our overall target, and the market does get there. But I would have had to withstand a little bit of movement that probably came down to about this level here. And I didn't want to chance it at that point. All right, guys, so we're almost done here. I think I'm getting ready to get knocked out of here. I think on this next candle, because we're at 16 seconds. And you could see this bullish volume here was some of the biggest volume we had within the last few candles. But look at the candle. Was basically almost an indecision candle. So you kind of know. And you could see I'm stopped out right there. So that's where the market took me out, made my profit. And that's how I trade the market. So, all right, guys. So hopefully this is something that helps you guys out. And if you want to keep seeing this kind of content, just please do subscribe. Let me know. And whatever, I'll keep it coming. Hopefully it helps you guys. Till the next time, have a great one. God bless. So long.